The next financial crisis will be the last one. I don't see them coming out of this next financial crisis with any credibility.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for August 7th through August 14th, 2023, while supplies last. This week we feature Silver Buffalo Rounds from Bulmint in Bulgaria at just $2.50 over spot. The Bulmint Buffalo is a new take on the Silver Buffalo, with unmatched 4/9 fine purity. Bulmint pride themselves on artistry and design, and produce a fine silver round with dueling buffalo on one side and a portrait of a Native American chief on the other. These 4/9 fine rounds come 20 to a tube and 400 to a Bulmint exclusive master box. They are available at just $2.50 over spot and are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor. Rafi, thank you so much for joining us today.
Thanks for having me again, Elijah.
Fantastic. Well, it's great to have you. Our viewers always appreciate your insights. You recently reported on the Lebanese hyperinflation that we're seeing over there, and a lot of the different, the money supply, what's happening with the money supply, the stock market, and also it was interesting how it seems like the price of things is going kind of crazy. If you wanted to discuss what is happening over there and also how it might reflect what we could see in the U.S. coming soon.
Well, the prices of consumer goods, specifically food, basic necessities in Lebanon is going way, way up in Lebanese pound terms. But in terms of dollars, it's going way, way down. I remember seeing a food blog that I put a clip in on my video that bread prices were down about 100 times. Bread that used to cost $1 now costs a penny, certain types of bread. So meaning it depends what currency you're in, which shows that it's not really prices of food going up. It's really the Lebanese currency going down, and then them needing that economy needing some kind of a gold substitute, some kind of a functioning money substitute that still works, so they can divide labor, which is why the prices of bread are going so precipitously down in the country. So meaning hyperinflation isn't really hyperinflation. It's not the prices of things going up. If you just take it one step back, Lebanon is hyperinflating in terms of its own currency, and then people go to the next most functional currency, which is the next most functional gold substitute. That's how I view a currency, being a functional gold substitute that exists, which is the dollar. So the question is, what happens when the dollar collapses? What happens to food prices? Well, in dollar terms, just taking it a step back from exactly what's going on in Lebanon, food prices go way up in dollar terms. So people who have dollars, they become poorer and poorer as the prices of survival in those denominated terms become higher and higher. But when the prices of what goes lower and lower when the dollar hyperinflates, and that is in gold and silver, because that is the money, that's not the substitute. And there is no gold substitute beneath the dollar because the dollar is the reserve. That's really what the definition of reserve currency means. It means the chief or the primary gold substitute in any given economic system. So in a global system, it would be the dollar, which is it's not any special status or anything. It's a historical accident, and there are reasons for it. But there's nothing special about the dollar. It's just a gold substitute. So when there is no more functioning dollar, you can't go to the euro, you can't go to any other currency that's on top of the dollar on the pyramid. You can't go to Bitcoin. That's not going to work either. You're going to have to go back to gold or silver. And yeah, you could go back to theoretically a gold-backed blockchain thing, but Bitcoin is not gold-backed, and there are gold-backed blockchains. Maybe they'll work, maybe they won't. I'm not sure. Depends on how the electric grid, whether it stays up or not. But you're safest with the physical, because if we do have a gold-backed blockchain, you can deposit gold or silver into it and get your coins or your tokens or whatever and see if they work. But I wouldn't say it's as safe as actually stacking physical coins. And that's what we're going to have to use in the immediate aftermath of the Endgame. Just bring it down from $1 to gold, depending on what currency you're talking about. But it's the same principles, really.
Now, when it comes to what could happen with the US dollar, I know you've been looking very closely at the deposits in the banking system and also demand for treasuries. Can you expand on kind of what we're seeing there and how it signifies a deflationary environment at the moment, and where do we head from there? Because obviously the end game is hyperinflation in your view. So can you expand on that?
Yeah. The end game doesn't have to be hyperinflation. There's one of two ways it could go. And really, they're both the same direction. It's like it's a loop. You either go right, you go left, you end up in the same spot. Either way, it's just how many zeros do you want at the end? But you can either lop them off or not lop them off. Either way, you're going to end up lopping off the zeros. What I mean is that deposits in the banking system, right? They're falling because we are in a deflationary environment where dollars are incentivized to go outside the banking system and into treasuries, right? Into the Fed's, into the Treasuries account, into the Treasuries bank account, which is not counted as part of the money supply. The reason that deposits are falling is, again, because the yield on short-term bills is so high. It's 5.4%. And what can you get in a savings account? If you leave it in the banking system, you can get like 0.5%. So the only way you're leaving it in a savings account is if you really need the money like right now, which means you're not going to save it, or you just forgot about it. You have a few $100 somewhere in an account and you don't remember about it and you haven't touched it in years and it's just sitting there. That's the only reason that there'd be money in a savings account. So I thought that once reverse repos, the money that's outside the system that is starting to flow back into it when interest rates rose, I thought that they would positively affect the money supply because you'd have all this reverse repo money that's now going into the Treasuries account and from there being spent into the economy. But that has not increased the deposits in the banks. It hasn't, which means that the deflationary forces, the forces that are sucking money out of the banking system are much stronger than the forces that are bringing it back into the system. And they're both happening at the same time. It's a tug of war. So we're still seeing these deposits get liquidated and the money supply fall and fall and fall. And to get back to the point of hyperinflation, how can we talk about hyperinflation when we're in a deflationary environment now? Meaning money supply. By deflationary, I don't mean prices are falling. I mean money supply is shrinking, and the effects of that are, after that process, there's a significant lag. So how can we be in hyperdeflation and talk about hyperinflation? Well, because hyperinflation is just a choice. When you're at a certain point and you have to keep bailing out the banks over and over again because they are essentially inflationary, whether you want to call that fractional reserve or whatever system they're using to inflate, it's all the same thing. They have a choice. The Federal Reserve has a choice. They can either keep bailing out the banks, in which case we'll have hyperinflation and the death of the currency, or it can just not inflate the banks, and most of the banking system will fall down until we get back to a $35 an ounce gold like we were in 1971, which means all the inflation, because all the printing that we've done from the beginning is all fake. It's all a lie. So it either all has to fall or it all has to be destroyed. Either way, you either end up with a $35 an ounce $35 an ounce gold or $35,000 an ounce gold and lop off 3 zeros and you're back at the same thing. So either way, they're all going to come down. It just depends on whether you want to save the currency or not, or repeg it to gold at a certain price and then lop off 3 zeros or not. Even 35,000. What's the difference? There is no difference. It's all the same thing.
It is an interesting way to really look at. It's a more true way to actually look at currency, because we think so much in dollars, but at the end of the day, as you mentioned, the only reason the dollar has value is because it was originally pegged to gold, and gold is really still the true money. So you mentioned also with Lebanon, what's happening there is that in dollar terms, the price of everything is falling. So in this environment, if we do see hyperinflation or whatever sort of end game we end up seeing, if you hold gold, the real money, you'll probably be able to buy a whole lot more things. It'll actually be a deflationary environment with respect to gold. Is that correct?
Yeah, absolutely. Look, if you're a Lebanese and you own dollars now, you're doing pretty well. But come the day, and those Lebanese that have those dollars, they're not going to be able to buy anything either. So if you're in Lebanon and you're stacking gold or silver, probably silver would be easier, because if you want to buy food, gold's going to be hard to exchange. So you're going to need a little bit of gold and a lot of silver. And if you hold that, then yeah, you can acquire dollars with that. That shouldn't be a problem. It's just one more step if you need to have dollars to buy your food. But the Lebanese are going to go through another round of hyperinflation when the dollar falls, but so is the whole world. So what's going to happen in the Endgame is basically what's happening in Lebanon, but in the whole world. And instead of dollars, the dollars are going to be gold. So if everyone is holding dollars and those dollars are no longer worth anything, then the world needs a liquidity to trade with. It needs a money. And according to the Austrian School of Economics, liquidity is money. It's the same thing. So when we become Lebanon, then everyone who owns gold is going to be able to buy their consumer goods really, really cheaply, including real estate and almost everything. Almost everything is going to be devalued against real money, because in a world where most people don't have money, the division of labor can potentially break down. So you need the economy, the global economy this time, not just the Lebanese economy, but the global economy, to incentivize as much as humanly possible to get that money circulating again, to maintain the division of labor or whatever is left of it. Otherwise, we could really see society break down. We're not going to see that, because the prices the things that you could get from exchange of gold and silver are going to be so radical and such a good rate that people are not going to be able to resist. That's what's supposed to happen at the end of these cycles, right?
So typically when we've seen hyperinflation, like in Zimbabwe, or I assume Lebanon as well, kind of modern day hyperinflation, a lot of people will turn back to an alternative currency like the US dollar, use that instead. But if the US dollar experiences hyperinflation, there really won't be any alternative, right? Because the US dollar is the world reserve currency, right? So if the dollar has trouble, then all other currencies would seemingly be in trouble as well.
Right. And if you just expand what has been happening since 2020, just monetarily, right? The Fed prints a whole bunch of money, expands its balance sheet, and then all of the central banks, they're pretending to be wise on their own and do what they need to do independently for their own countries and their own territories, but really they're just following the Fed because they have to. We're seeing the same thing now. The Fed is pushing up interest rates and putting the brakes on the money supply, and so are the other central banks. They're raising interest rates and putting brakes on the money supply. They're not doing anything independently. Really, the Fed is the central bank of the whole world, and everybody follows it. Why? Because these currency regimes, they have to keep their currencies in a general trading exchange window in order to maintain their economic structures as they have been, or else there's going to be a serious upheaval in their countries where the exporters are going to complain, the importers are going to complain, people are going to lose their jobs, and things are going to have to be reorganized. It's like telling your kid to clean your room, and they don't want to, because it takes a lot of energy. But there's a lot of garbage that is built up in all these economies, and all the central banks are following the Fed. So when the dollar falls, meaning to expand that out, when the dollar starts hyperinflate, it's not like the euro is going to do so well all of a sudden. If the dollar hyperinflates and the euro and the ECB decides, okay, we're gonna raise interest rates and strengthen the euro while the dollar collapses, then the entire trade flow relationship between the EU and the United States will reverse, and that's going to disrupt the entire trade system, and these politicians are not built to handle that. So they'll just all hyperinflate with the dollar.
Now, we've talked about before the banking crisis, and I wanted to see your perspective on how these latest developments we've been seeing really tie into this, and kind of show that we might be headed closer to the end game. We saw two banks, one bank a takeover, Bank of California, or PacWest was taken over by Bank of California, and then we saw a small Kansas bank fail in the last couple of weeks here. Your perspective on the ongoing bank crisis and how it ties into all of this.
So PacWest, if I'm remembering this correctly, I saw it out of the corner of my eye. I was following the stock price because that was the next bank to fail. So if I remember correctly, what happened with PacWest is they released their earnings, and it was like it blasted through expectations. It was a great thing, and then the stock price went way up, like 20% or something. And then it was either that day or the next day or 2 days later or some very, very short amount of time later where there was a press release they were selling, they were being sold to the Bank of California. So like, what was that earnings statement about? Like, okay, so they had great earnings and whatever, and the shareholders are really excited, and the high frequency trading algorithms go crazy, and they push the stock up 20%, and then all of a sudden there's a press release. We're selling ourselves to the Bank of California. Goes back down. So what is it? What does that tell me? That tells me that you can't really trust any of these earnings statements from any of these banks. Why? Because they're the engines of inflation. That they make money through the inflationary process. So their earnings themselves are really nothing, because it's hard to even see what's going on behind the front end earnings statement, the two-dimensional. Okay, we earn this much in this sector, earn this much, and we have this much dollars now more. But like, they have all of these inflated assets on their balance sheet that could collapse at any time, which is why PacWest sold itself to Bank of California, because despite their amazing earnings, they couldn't survive alone. So but that's the thing with banks. We saw the same thing with Silicon Valley. Like, it was fine, and then one day there's a press release and it's zero. Okay, that's the nature of these inflationary engines. You can't trust what they actually have under the hood, because when you come, the most basic thing to keep in mind is these banks have no money. They have paper that they shuffle around, and when the paper goes up, they say, "Oh, look, we have earnings." And when the paper goes down, they lose them all and lose everything. That's the nature of an inflationary system. It's all an illusion. That's it.
It's all an illusion. So you're saying it's an illusion because it's not based on gold. It's not based on anything real.
Yeah, that's why. Well, as the engines of the inflationary system, these banks are the sources of the mirage. So they're like closer to the blast radius, so to speak. And when the inflationary system kind of eats itself, they're the first victims. So you could say the same thing in the ripples out. The biggest companies get hit the most, if we're talking about the FANGs or the Googles or the big tech or whatever, and they're the first to like really fall hard in a recessionary implosion. And then the ripples go out and out, and then the blast radius from the banks ripples out to the smaller and smaller companies, and all these stocks go down. But the closer you get to the consumer sector, the better things are, and the closer you get to the banking sector, the worse things are. It's an explosion. So the ones to be hit worst by that explosion are the banks, and in this case, it'll be the central bank itself. Like when the Fed really goes bankrupt, which it already is, it's just we're waiting for the results of that to manifest themselves. When the Fed goes bankrupt, all of its banks go bankrupt, and then every company that has dollars go bankrupt. The only companies that survive are the ones with a store of real money, of gold and silver, somewhere in a safe or in their accounts or whatever they hold gold and silver in, or any company that has real assets that it can trade for real money. But if they don't have any of that, and they're just dependent on the inflationary dollar, they're going to lose everything, and then their assets will be sold off.
And it seems like the solution, and obviously we've talked about this before, is to really get yourself outside of the system, at least in some respect, by holding physical precious metals and owning things that are real. And that has a basis. I mean, we see what's going on right now. You can make the case that we're headed towards this endgame. I know some people say we've been waiting for this for a long time, so we don't really know when it's going to happen. But if you look at this on a logical basis, it seems like it has to happen eventually. But there's a benefit to holding precious metals regardless, because it puts a foundation into your financial well-being that is good to have at any sort of economic time. Can you expand on that kind of ways to prepare? I know we've covered this before, but your latest thoughts on that?
Yeah, well, if you're going to talk about the timing question, yes. So I'll answer that in two ways. One, I don't know exactly when. I can't give you a month or a day or even a year. I mean, I think it's going to be this year or next. Admittedly, I've been saying that for a long time. But what I think is a much surer call is that the next financial crisis will be the last one. I don't see them coming out of this next financial crisis with any credibility, because they got inflation down to 3% a year. Wow, so low. But if you look at the month over month, I think it's at 0.2, and I think that has been ticking up. I think we've hit the bottom in the inflationary CPI, which is pretty much a fake report, but there's some heuristics to it. There's some reliability to it, very little. So in terms of timing and gold and silver, right? The reason for stacking gold and silver, we have to. It's hard to do, but we have to get out of our heads multiplying the gold and silver that we have by the dollar price, and then calculating how much dollars we have, because that's what we all do. That's even what I do sometimes, because I still count things in dollars. I don't really count things in gold and silver ounces because I never lived that way, even though I know it's true. So if we get ourselves out of the dollar paradigm mentally, and we're not really interested in how many dollars we have, then the timing doesn't really matter, because when you have a gold and silver ounce, you have it, whether we're in the end game or not. And if you need to use it, you can use it. You'll always be able to use it. You'll be able to liquidate it if you need to get dollars if you need them. What you don't have to worry about, you don't have to worry about the business cycle anymore. You don't have to worry about if you're like you own stock in JP Morgan or Bank of America. Is Bank of America going to collapse, or my shares going to be worthless tomorrow? Because that can happen with banks. I mean, look at PacWest owners. Look at Silicon Valley Bank stock owners. You never have to worry about that with gold and silver, ever. You just have to hold it. And if we're lucky and if we're right, then soon enough the end game will come, and we'll be able to liquidate our stacks, or most of our stacks, for real assets and provide the economy, the global economy, the money it needs to survive. Instead of, and don't even see it as like buying things and making yourselves rich. It's providing liquidity to an economy that is starving for it. That's what our jobs will be. So instead of calculating in a dollar number how rich you're going to be in dollar terms, see it as a civic duty to be a bank for the global economy, when the global economy needs money more than anything else to sustain a division of labor and keep people alive.
Fantastic. Well, Rafi, we really appreciate your time today. If our viewers are interested in learning more, where can they go to find your work?
You can search for the Endgame Investor on any search engine. It's a service through Seeking Alpha. I publish 3 to 4 times a week with a weekend report. You can find me on Patreon at patreon.com/endgameinvestor, where I give a more biblical angle to what is going on today, whether it's government, money, economics, those types of issues, very liberty-centered. And you can follow me on Twitter at Rafi Farber. That's where I'm active. I try to keep it focused and small. That's where you can find me. And I hope to see you on the Endgame Investor or my Patreon.
Fantastic. Any last thoughts before I let you go, Rafi?
Have a good summer, everyone. This might be the last one before we start to dishoard our gold and silver holdings. So make sure you have enough. Make sure, first and foremost, you can sleep well at night without worrying about your stock portfolio. And try to do an exercise and price things in gold and silver in your head to see how many ounces you need for this and that, and see if it changes. Maybe make a data point for today, calculate what your daily expenses are in gold and silver ounces, see if they change in the end game when it hits. Could be fun.
All right. Well, Rafi, we really appreciate your time as always. Thank you so much, and God bless.
God bless you too.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.